Hello, promoted Markets. This is Zahra, and I will be with you with the global economic outlook in the week ahead, which is going to be the week number 21, 2025. As always, let's first check what we had previous week. Let's talk about the previous week and what the most important data and events that happened, and then we can talk about the week ahead. Previous week, as you know, mostly the market was got affected by trade talks, which happened previous last week in Saturday and Sunday between USA and China, where they agreed to pause the tariffs or lower the tariffs actually to around 30% for 90 days and give the chance for the talks and see what's going to happen. That supported somehow the market, but still it was not that much positive. But anyway, they made to stock markets generally to end higher, close higher. Out of that, we had other data such as the inflation numbers from United States. The United States data, both CPI and PPI, for the CPI increased in only 0.2% for headline and core inflation, and PPI fell by 0.5%. And they confirmed that the US inflation is somehow moving in line with the Federal Reserve expectations and towards its target. That's increased the chance of at least one rate cut before September meeting, which means that we can say that it's going to be more dovish expected policies, and so that which was another reason to support the stock market. On the other hand, out of the US, we had the GDP numbers from most developed economies, especially from United Kingdom, which increased by slightly 0.7% more than expected. But industrial production and manufacturing production was a little bit negative. In Japan, we know that the GDP fell by 0.2% quarterly and 0.7% annually, while on the other hand, in Europe, GDP increased by 0.2% quarterly and 1.2% annually. Very good numbers for Eurozone. Data generally it was positive from Eurozone, but from Japan, we are still a little bit more confused about the data. But still, they were not that much. I mean, the data from the Japan that was not that much disappointing that we can say that the central bank is going to change its mind on changing the interest rate path that is expected and plans that it has. In the week ahead, while in the United States, we're going to have a little bit lighter week, which mostly housing market data, property market data with the new and existing home sales. Out of the US, but out of the US, we have two central banks meeting. But still, in United States, we will have too many speeches from most members of FOMC or Federal Reserves, and we have to watch them more closely. We have to follow them more closely as hawkish stance or hawkish comments from bankers going to support the US dollar index and put the pressure on the stock markets, and vice versa. We are mostly talking about expecting that the Federal Reserve members, FOMC members, to speak more, to speak about more wait and see policies, which means that for now we have to expect the higher rates going to continue for slightly longer. So higher for longer means supportive policy for US dollar and pressure on the stock markets. As mentioned, in United States, we're going to have two housing property data as well. Existing and new home sales. Existing home sales expected to increase by 2.6%, while the new home sales supposed to fell by 2.6% or 2.7% after 7.4% drop that we had in March. In April, the data is supposed to show that the existing home sales increased, the inventory for existing home sales increased, which can support the sales in the inventory sales of the new home sales with slightly lower prices, especially with especially with inflation numbers. We can say that in the previous inflation numbers that we had slightly lower in the past 2 months. We can say that right now the mortgage rate also lowered, and that can support especially the existing home sales. And Out of the United States, about the speeches I talked, out of the United States, two important data we have somehow they were common. I mean, we have these numbers from most economies, including inflation numbers, which on Tuesday we're going to have the inflation numbers from Canada. We expect the Canadian inflation to slightly ease to 1.6% annually from 2.3%. The consumer price index kind of supposed to slightly lower, which means that inflation generally can give the somehow the more optimistic and more positive optimistic data, but that it's somehow it's under control. And but however, we have to wait and see that will that these tariffs and trade wars can affect the inflation or not. We're gonna understand it more in May data, not in April data, which we're gonna have now. Out of that, in United Kingdom, we're going to have the inflation numbers where we expect to see that the core inflation is to increase from 3.4% to 3.6%, while the headline inflation supposed to be almost steady around 2.6%. And that these data cannot change the idea of lower interest rate by central bank by British Central Bank, as the economic is giving more weakening signals. So still we can expect that the BOE to cut its rates, especially with industrial and manufacturing production. That's they were negative previous week. And in Japan, we're going to have we will have the PMI. We will have the just like PMI numbers as well, but we'll talk about that. But finally, I have to say that in Japan also we're going to have inflation numbers on Friday, where we expect to see national CPI to increase from 3.6% to around 3.8%, while the national CPI or CPI, it means that excluding food and fresh foods, gonna increase to 3.4% from 3.2% generally. Then inflation numbers, that's what we expect from other economies. Out of that, we have the PMI number is the most common number that we're going to have from most developed and developing economies during the week ahead, which we are expecting to see the PMI, manufacturing PMI, actually, that's the number of the PMI that we're going to have. It's the manufacturing PMI. And we expect to see that manufacturing activities to increase slightly in most of these economies. I mean, most economies going to see this increasing in the manufacturing activity. We are generally positive, especially from the Europe. We are positive about the manufacturing activity, which can support the idea of probably holding the current rate for European Central Bank. That don't forget about that. That's going to be very important for European Central Bank. From Eurozone, we have the inflation numbers as well. I forgot to talk about that, but we don't see any changes there, and probably going to see the 0.6% monthly and monthly increase, and core inflation can be steady around 2.7%. And then the other thing that you have to watch in United Kingdom, we will have same as other economies. We're going to have the inflation numbers and PMI data, but still we're going to have we're going to have the retail sales as well. We are expecting to see the retail sales to increase by 4.2% after 3.2% rise in the previous month. But still, as mentioned, considering all these data, we say that the Central Bank of United Kingdom or BOE, Bank of England, can cut the rates by another 25 basis points in next meeting after several months or two times. Yeah, after 2 times holding the current rate. And the central banks, on Tuesday, we will have the central banks meetings in China and Australia. As you know, the People Bank of China cut the RRR, or reserve requirement ratio, by 0.5% to 9% 2 weeks ago or last week, which means that right now the private banks, they have more opportunity to give, they will have more cash actually to give as a rent to send to give a loan. So which means that these loans can can increase the cash in the market and support the small, especially medium and small businesses to increase. But that's why for now we don't expect the central bank to cut the rates. Probably they're going to stay unchanged at 3.1 and 3.6% for 1 and 5 years loan prime rates unchanged, which actually these levels also, they are the historical low levels. For now, we expect to see this, especially we know that from next week that we get from China, we will have retail sales, industrial production, and generally we expect to see slightly weaker data after previous months increase. The Central Bank of Australia or Reserve Bank of Australia also will have the policy meeting, and we expect to see 25 basis point rate cut from 4.1% to 3.85%, especially after slightly falling inflation and increasing and concerns on the economic growth. We can say that the central bank in Australia going to have more acceptable, reasonable reasons and acceptable reasons to cut their rates. Let's check the charts and see with these data how we can expect or what we can expect from price movements. US dollar index, since we don't have too much data to go through, but we have too many speeches. These speeches, they are really somehow we don't know what going to talk about in their speeches. But generally, what we expect is to see more wait and see policy and more cautious, which means that the US dollar index probably also can give the cautious reaction to these data and these speeches, which move between 99 and 101. So that's what we expect from the currency market. So US dollar index can be we were talking about the movement between 98 and 100. Now we can change it a little bit higher to 99 and 101 marks. This is the area that we can expect the US dollar index to have a slight movement in. And on the stock markets, as we can see here, isn't too much lines here, but still, what you can see here is that, let's maybe make it a little bit. Okay, now we can say okay. As you can see here, after previous fall, S&P 500 covered around 88.6%. Now we expect to a little bit more hawkish policies and comments from the central bank speakers, which means now after this correction, you can say that now S&P 500 going to get closer and ready to start its downtrend again. Next target will be around 61.8%, which is around 5,630. But for now, the first target around is 5,800, 850 is the first supporting target that we have. But still on the cryptocurrency, on the gold market, on the commodity markets and in the gold generally still in an general uptrend. Previous week, we talked about $101 as a possible correction and then recover from this level, which happened, and we had this the market move towards our expectations. Now for gold, we expect to see more side movement with upturn tendency, which main reason is because of the geopolitical tensions and global development in the economy. But still, we don't have too much information and certain data. We can say, okay, based on this or based on that. That's why there's some market uncertainty and geopolitical tensions generally can support the gold demand, especially we know that on the other hand, we know the central banks also, many central banks also, they are starting again buying the gold. On the other commodity, which is the oil, with the previous week we had monthly report from OPEC and EIA. Both of them, EIA, IEA, and OPEC, all of them, they increased the support or supply expectations, while we know that OPEC Plus also increased its supply with 411,000 barrels a day. If the peace talk between United States and not the peace talk, the nuclear deal between Iran and Islamic Republic of Iran and United States goes well, also we can expect 400,000 barrels from Islamic Republic. But generally, what we can say here is that for now, market doesn't expect too much demand in the market, as the geopolitical tensions are still high, as the trade tensions are still high, while on the other hand, while the supply expected to increase with decisions that already OPEC Plus had with the ongoing negotiations. But so that's why generally we expect to see that the oil price also moves side movement between $60 and $64 for now. $64 target of previous weeks also was touched, and now we can say that the oil can move between $60 and $64, not big changes from here. Yeah, that's what we expect in the oil market. We talked about this about the cryptocurrency. We talked about the stock markets. Finally, about the cryptocurrencies. Technically, we can say that fundamentally ETFs going to, after Ethereum updates and ETFs sales, we can say that generally fundamentally supporting the prices. Technically, also the Bitcoin trading above, as long as it's trading above $95,000, it's uptrend, clear uptrend, but especially as long as $101,000 pivot point is holding, the price is holding above this pivot point, we can say that the uptrend is continuing. 105,000 and then 108 and 111,000. They can be next targets, one after another. But for now, we don't expect too much to say that. Okay, now his price is still ready. Now is ready to go. Maybe in June a little bit more higher prices, but for now, at least we don't expect too much movement, especially as mentioned in stock markets. We expect some correction, which can affect the cryptocurrency market as well. Yeah, that's what's happening in the markets and what we expect to see. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye bye.